Hello there, so in today's video I'll be comparing AbbVie and Pfizer, two pharmaceutical stroke biotech companies which are very popular with dividend investors in particular. I will take this through the usual format that I do when I do my normal versus videos. So first I'll start by going through what each company actually does and giving you a little overview of that. Then we shall run through the key metrics. We'll look at things like their balance sheets, so we'll see which one's got the better balance sheet. We'll look through their income statement. We'll look through their previous stock history. We'll look at their dividend yield, their dividend safety, and so on and so forth. And at the end, as always, I'll give you my thoughts on which one I think is best and if I'm investing in either or both of these companies. So I should let you know that at the end of the video, along with what price valuation I think it's worth investing at on either of those companies. I hope that makes sense. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I release a new video. And if you enjoy this video and find it useful, please do hit that thumbs up, because it apparently helps the YouTube algorithm, which in turn helps spread the word of the channel, and of course that helps me, so I do really appreciate that. So hit that thumbs up button. Have you done it yet? Have you done it? I'm waiting. Come on. Okay, thank you. Right, okay, so before I start, I do need to say I am not a financial advisor, so this is not financial advice. You do need to do your own due diligence on any stocks or shares or investments for that matter before you make investments in them. Don't just take my word for it. Do your own research, folks. Now, this video was requested by Cody in a previous video, which was actually AMD versus Intel. I'll put a link to that one up above there and in the description down below in case you're interested in it. I have made a whole series of versus videos if you're interested in me doing a comparison of two particular stocks. I'm particularly interested in dividend companies, so if you have any two dividend stocks that you're interested in me comparing, please do feel free to leave a comment down below and I will add that to my list to make. I've got quite a growing list now, but I am working through it, so if you do add it in the comments down below, I do read every single comment. I will reply and I will add that to my list to make. But like I say, I'm looking really for dividend companies. That's what I'm into at the moment, so that's what I'm really looking to compare. Right, so let's start by looking at what these two companies do. So we'll go over to the slides now. So we're starting off here with AbbVie. So AbbVie, as you can see, consistently increased R&D, research and productivity since inception. And you can see that the amount of money they spent in 2013, which is when they basically launched, was literally almost half of what they were spending in 2019, and I can tell you will see later it's gone up again. So they're continually improving what they spend. And on the right hand side there, that bar chart, that shows the kind of therapeutic areas that they're focused on. So you've got immunology, oncology, neuroscience, virology and women's health. So they're focusing on those key areas in their research. Now these next two slides really are a comparison. So this slide, what you're looking at here is the amount that they've got in each phase of development. So these are the drugs that are in each phase of development, and that was in 2013. So this is their pipeline, and the key thing to note is I'll flick between this and then the next slide. The next slide shows by February 2020, can you see phase 1 has almost doubled, and if I go back you can see phase 1 has almost doubled. The recently approved phase has obviously appeared, which wasn't there before. Submitted has increased. Phase 3 has again more than doubled, probably tripled, and phase 2 has stayed about the same. So the point is they have more things in the pipeline now than they ever have before. That's the point. So and like it says at the bottom there, we continue to focus on quality of our medicines whilst doubling our early stage pipeline since 2013, with more than 30 assets currently in late discovery and preclinical development. That's important because bear in mind they make money from selling these things, so they need to get them to the final stages. This slide here really just gives you an overview of some of the products they have and gives you an idea of the revenue since inception, which are growing robustly according to the top of the slide. This again shows you that they're looking at their current drugs and thinking, can they use them for other things? So on the left hand side there you can see what they're currently approved for, and then on the right hand side they've got future disease areas which they're obviously aiming to diversify those drugs into, or maybe modify them a little bit to be able to help people with other ailments, which is obviously good because it means they can get more money from essentially the same product. I put this slide in really with the following few slides just really to give an overview of what they do, so I'll just skip through these quickly. So oncology obviously is one of the areas they focus on, immunology is another area they're focusing on, and neuroscience is another area they're focusing on. This really is just letting you know they're expanding the R&D, very similar to that first slide at the beginning. They are increasing that R&D dramatically, and this shows you where they've got labs around the world. Now bear in mind, this company's only been around since early 2013 really. Their stock, as you'll see when I look at the stock price, you could actually invest in their stock in December of 2012, but they've only actually really been working since 2013, January 2013 I believe. Their top talent has allowed them to build industry leading capabilities in important scientific areas including bioinformatics, genetics and genomics, and other words Andrew really can't say, protein engineering, precision medicine, and so on and so forth. And I put this slide in here just because obviously this is what's going on in the world at the moment, causing all the stock price issues and issues basically financially around the world. They are working on this particular incident that is taking the world by storm and forcing lockdown orders and the like. So that's AbbVie and an overview of what they do in a nutshell. Let's move on to Pfizer. Pfizer, I do like how their logo looks very much like one of their famous tablets, which will help you if you ever have any problems down below, gentlemen. So Q3, this just gives you an idea of some of their product line and what kind of things they are doing, how many patients, how much money it's making, and so on. Again, this gives you more of their brands. This slide here shows you exactly what they are doing in relation to COVID, and they are working on obviously vaccines for that, so I'll leave that slide there. You can pause the video and read that at your leisure. Other selected pipeline updates, they are working on rare diseases, they're working on oncology, they're also working on inflammation and immunology, and of course vaccines. So in many respects you can see both of these companies are very, very similar in what they actually do and the areas that they are working on. So I suppose much like my Coca-Cola versus Pepsi, these are direct competitors in many respects. Both of them are attempting to cure cancer. They're both bringing out medicines and vaccines for a whole wide range of disease, and they're both taking essentially a multi-thread approach to it. They're not just looking at it from one angle, they're looking at it from the different angles that can be taken when it comes to making humans fit and well. So that leads us to our first round comparison, which is the business risk. And for business risk, because they're so similar, I think it's only fair I give them 1-all on this. Both of these companies I think have got a bright future. Let's be honest, people are going to be ill for years to come. These diseases are not going away. New diseases seem to be cropping up all the time. As we all know, just now in 2020 we have a new one that's taken the world by storm, become very popular. I mean popular in a bad way. Obviously both of these companies are working on things to help ease that and help reduce the pandemic and hopefully cure COVID. And so as a result of that, and as a result of the fact that people will be ill forever almost, I suspect, these companies I see have a very long and bright future. So they're not, in my view, at any great risk of going out of business anytime few in terms of the business area that they're in. So now let's move on and let's look at their stock price charts and their valuations. So we're going to start here with AbbVie. Its current share price is $85.10. It's got a 52-week low of $62.55 and a 52-week high of $101.28. So it's kind of midway between the two. But if you look at the 1-year chart there, you can see that actually, with the exception of the March dip, it's actually trading fairly low compared to what it normally trades at. You can see it's got a forward PE ratio of 8.13, which I can tell you is low, so that's a good valuation from the purpose of buying it. It's got a dividend yield of 6.11%, which is absolutely phenomenal, quite honestly. And so let's now take a look at its 10-year chart, because we want to get a look at the trend. Now, you can see this 10-year chart doesn't go back fully 10 years. The earliest I could go back to was the 10th December 2012, because that's when their stock became available for purchase. They actually started trading properly on the 1st of January 2013, but you can see it started back then in December 2012 at $35. And if you fast forward to today's price of $85.10, you can see that if you'd have bought it back then, you would have actually made 143% capital return on investment. So that's phenomenal, despite all the ups and downs, which I've pointed out on this graph here. So you can see it actually peaked in January 2018, $122.31. That's a number worth remembering. Its lowest point was in March 2020 at $62.55. And I've got the August and the March the March 2020 and the August 2019 numbers are wrong way around. I do apologize about that. And it peaked this year at $101.28, and that was in July. So that's its 10-year chart. So you can see the general trend, I would say, has been up. It's then had a down. As you can see, it ran down basically from January 2018 right until August 2019. It then proceeded to start climbing again. Obviously, March got in the way when the entire stock market collapsed, ABBV included, as you can see, but it recovered very, very quickly, and it's now pulled back somewhat. So that's where we are with ABBV. Now let's look at the Pfizer share chart and see how it's doing. So it's down actually over the 12-month period, 7.8%. If we go back to ABBV, you can see ABBV is actually up 6.83% over its 12-month period, but Pfizer over the 12-month period is down 7.8%. It looks a lot more level. Again, it had the dip in March with the rest of the stock market. It's got a 52-week low of $27.88, a 52-week high of $40.97, so it's trading closer to its high than its low really at the moment. It's got a dividend yield, a very respectable dividend yield of 4.28%. And let's now look at its 10-year chart. So its 10-year chart, you can see back 10 years ago it was $17.45, and now it is $32.04. Now you could have bought it back 10 years ago exactly at $15.45, and had you done that and held it until now, you'd have 101% capital gain on that. Now if you want a like-for-like comparison and you look around the December price when ABBV was available, then Pfizer was actually available at that same time for $25.23 per share. So had you held them over the same time period for a like-for-like comparison to what we compared earlier, then this price improvement, if you like, would have seen a 41% capital gain, which is obviously lower than the gain we saw from ABBV. Now its PE ratio is 12.3, which is a low PE ratio, so that's a good thing, but it's not as low as ABBV. Its current price is $35.48. So now onto the comparison. So PE ratio, we have to give that to ABBV, because its 8.13 PE ratio is obviously lower than Pfizer's 12.3 PE price to earnings ratio, which makes ABBV slightly better value. For dividend yield, 6.11% is frankly astonishing, absolutely amazing dividend yield, which is higher than Pfizer's 4.28%, which is still a good dividend yield. Let's not be upset about that, but that gives a clear win to ABBV. Share price, ABBV is down 16% from its 52-week high. Pfizer is down 13.4% from its 2-week high. So ABBV actually has more price to recover to get back to its 52-week high, and its past share price growth, again, ABBV has actually grown 141% versus Pfizer's 41% over the most recent 8-year period. I couldn't do it over 10 years because ABBV's not been trading for 10 years, so I had to give it a like for like. But actually, even if you'd looked at Pfizer over 10 years, Pfizer over 10 years had only grown 101% versus ABBV over 8 years growing 141%. So either way you look at that, ABBV is the winner. So ABBV wins on those metrics. So now let's take a look at the income statements. So we'll start with ABBV. So the first line we're going to look at here is the gross profit. You can see ABBV's gross profit back in 2015 was 18,620, and bear in mind these numbers are all in millions, and then that grew in 2016, it grew again in 2017, and again in 2018, and again in 2019, and again in the current 12-month, the trailing 12-month period. So you can see that's growing gross profit. If you look at the top line there, the revenues, you'll see that's growing as well. If we go down to operating income, you can see that is growing as well year on year. 2015, 8,000, obviously this is millions, so it's actually 8 billion, then it was 9 billion, then 10 billion, then 12 billion, and 13 billion, and that has actually dropped just a touch this trailing 12 months. If we go down and look at the net income figure, you can see the net income has gone from 5 billion and basically climbed. It dropped a little bit. If you look, it climbed a little bit exponentially in 2016, dropped down a touch in 2017, and then continued its climb from there with a slight pullback in the most recent trailing 12 months. So now let's look at the same metrics for Pfizer. So its gross profit back in 2015 was 39 billion. It increased in 2016, increased again in 2017, increased again in 2018, dropped in 2019, and has dropped again in the current 12 months. Its operating income has gone from essentially 13 in 2015 to 14 in 2020. So it's gone up, but not a great deal. Gone down. The gross profit's essentially gone down over the 5-year period. The operating income has essentially stayed the same over the 5-year period. The net income, let's look at that. So there's the net income there. We've gone from 6.9 billion up to 8.6 billion in the current period. Although it did peak. If you look in 2017, it was much higher at 21.3 billion. So that was how Pfizer is doing. Now, if we just look on this graph here, you can see the blue line is AbbVie and the orange line is Pfizer, and this is showing the operating income. So you can see back when AbbVie launched, Pfizer was basically having 3 times the operating income of AbbVie. And as you can see, as time goes by, you can see these lines getting closer and closer together. Pfizer's pretty much staying the same, whilst AbbVie is increasing. It overtook it actually in the first quarter of 2020 for the first time ever. But at the moment, they're running very, very similar. Very, very similar in terms of their operating income, these two companies. So AbbVie is very quickly catching Pfizer, and at the rate it's going, it will overtake it imminently. And it kind of already did at the first quarter. So the odds are, if it carries on as it is, it's going to outgrow Pfizer. Let's go back to our comparison now. So for the income statement, we're going to give that win to AbbVie because it's growing profits year on year. And obviously that continual growth versus the more static line of Pfizer, whilst there's nothing wrong with it, stability, it's not growing, not like AbbVie's growing. AbbVie is growing a lot faster in terms of the income. And that's what we're looking at on the income statement. So next, let's take a look at the dividend safety, the dividend growth rate, and how long they've been growing their dividends for. So as you can see here, AbbVie have a payout ratio of 49.81%. That's very, very safe indeed. They have a 5-year growth rate of 20.86%, which is exceptionally high. And they have 7 years of consecutive dividend growth rate. And if we click here, we can see started off at 40 cents per share, then 42, then 49, then 57, then 64, and so on. And you just see it goes up and up and up and up and up. And you can actually see that it's just recently increased it by about 10% there. So they've had a big increase literally in the third quarter of 2020. So this is fabulous news. They always say an increase in dividend or recently increased dividend is a safe dividend. So I would say that's safe, and that is a beautiful chart there. So that is AbbVie's dividend. Let's have a look now at Pfizer. So Pfizer, you've got a payout ratio of 52.34%, so a little bit higher, but still I would say nice and safe. You've got a 5-year growth rate of 6.72%, so it's still a growth dividend stock. It's not that it's not growing its dividend, it is growing its dividend, just nowhere near as fast as AbbVie is. But then obviously remember, its operating income, its profits are not growing as fast as AbbVie's profits are, so it can't share out at what's not growing. Whereas if your profits are growing fast like AbbVie's are, you can share them profits out. But it's got a 10-year dividend growth history. So let's have a look at its history now. We'll go for all. And you can see it started off there at just 2 cents and increased, went all the way up to 32 cents. And these are paid quarterly. And then in 28, something went wrong and it halved from 32 cents per share to 16 cents per share. And that was in 2009, look. And it took it right up until 2017 to get back to the same level. It has since surpassed that level, so hence it's on this 10-year run that it's done there now. I mean, 2009 you could call that 11 years, really, I would have said. So that is the history of Pfizer. So something obviously went wrong in 2009, but bear in mind that was before AbbVie's inception. So let's look at the comparison now. So dividend safety, I'm actually giving that one to AbbVie because it's slightly lower payout ratio. Now, there's nothing wrong with the payout ratio on Pfizer. Literally 52.62% payout ratio is a perfectly safe payout ratio in my opinion. So I think that's fine. It's just AbbVie's payout ratio is paying out a smaller percentage of its profits, which means it's got more headroom to increase its dividends if it wants to. The dividend growth rate has been 20.86% over the last 5 years versus 6.72% for Pfizer. So again, we've got to give that one to AbbVie because that is a phenomenal growth rate, quite frankly. AbbVie's amazing on that front. Now, growth in terms of years, AbbVie's 7 years versus Pfizer's 10 years, I'm actually going to give that 1 all, because I don't think it's fair to penalise AbbVie for the 3 years when it wasn't around, because it couldn't have given any dividends. For the years that it could have given increasing dividends, it has indeed paid increasing dividends. So it does certainly appear that paying out increasing dividends is important to the management of AbbVie, and so I'm thinking that's fair to say that's comparable to Pfizer, even though Pfizer's done it for 10 years longer. Remember, Pfizer did have that drop, so they had an issue. They were rising it, and then something went wrong. Now, that's not to say something won't go wrong with AbbVie. It might. You know, you'd have to have a crystal ball to know, but I think on that metric, for the sake of the score, 1 all is a fair number to give, so that's what I'm giving them. Let's look now at the assets and liabilities. AbbVie, assets and total assets versus total liabilities, score is 1.1, which is a perfectly good score. Pfizer's is 1.5695, which is a better score. So we're going to give that one to Pfizer for total assets versus total liabilities. And when it comes to current assets versus current liabilities, which, if you don't know, these are the things that are due within the next 12 months, we have to give that again to Pfizer. AbbVie is less than 1. Really, we like the number to be more than 1. So it's not good that it's less than 1. It's good that it's close to 1, but it'd be better if it was over 1. We're looking for a score of 1 or above, really, so that we know that what's coming in the next 12 months is more than what needs to go out in the next 12 months. We want them assets that are on hand to be able to cover the next 12 months, really. We want it to be over 1. As you can see, Pfizer have got that covered with a score of 1.4. So in terms of risk of going out of business, Pfizer are very safe in that respect. So when we go to the comparison here, Pfizer has a clear win on assets versus liabilities because it's got a better ratio than AbbVie, and it has a clear win on current assets versus current liabilities. Okay, so now we're going to review the balance sheets. So this is AbbVie, as you can see. So its total cash and short-term investments back in 2015 was 8.4 billion. And by December 2019, that had grown to 39.9 billion, so quite some growth there. It went down and up in the process on the route there, but they have indeed cashed up, or they had in December 2019. Their total current assets, you can see near the bottom there, was 16 billion, stayed at 16 billion, went up to 21 billion, went back to 16, nearly 17 billion there, and then has rocketed up to 49 billion. So the total assets in 2015 for AbbVie were 53 billion basically, and they grew in 2016, grew again in 2017. For some reason there was a decline, as you can see, in 2018, and then they've grown again by 2019. Now, if we look at the liabilities, they've gone from 10 billion, 9 billion, 16 billion, 17 billion, and then they've fallen to 15 billion, which is a beautiful situation for us to be in, because that means our equity will have increased in 2019. Now let's look at Pfizer. So Pfizer, you can see there the total cash in 2015, 23 billion. That fell in 2016 to 17 billion. It then went up to 20 billion, then down to 18 billion, and then fell to 19 billion in 2019. The current assets, total current assets, went from 43 billion in 2015 down to 32 billion by 2019, and you can see the movements in between there. It kind of just bobbled along, essentially, for want of a better description, and its total assets at the bottom there are almost identical between 2015 and 2019. Now what I want to do is just go back here, and instead of doing annual, I'm going to do something I don't normally do in these videos. I'm going to look at the quarterly for you. Looking at the quarterly on AbbVie, as you can see, so we're now looking at just June, September, December 2019, March 2020, and June 2020. So now you can see that cash balance, it increased to December 2019, it carried on increasing up to March 2020, and then it has decreased again in June 2020, back down to the lower levels, similar to what you could see it was holding in previous years. Its total current assets have also declined slightly, but are still higher than this time last year, essentially. If you look at the June 2020 versus September or June 2019, you can see it's actually higher in June. So that's, I would say, a good thing. And AbbVie's total assets have rocketed. If you look over these quarters that we're looking at now, you can see it's gone from 57, 59, 89, 91, and then 149 billion. So that is a massive increase in total assets. So let's look at the liabilities. You can see the liabilities have also increased as well, proportionately: 65, 67, 97, 98 and 134. So they're in relation, they're moving the same. If we look at Pfizer over the quarterly periods, we can see its total cash and investments are staying fairly flat. They have increased a couple of billion on the previous year. There were 9 billion last year, 11 billion this year, so that's a good sign. The total current assets, again, they went down, then they went up, and then they've increased. So that's the current assets, and their total assets have essentially stayed pretty similar. They've gone up a little bit, but not as much of an increase as we saw with AbbVie. But let's look at what the liabilities are doing. Total liabilities, again, they've increased, but not as much again. So proportionately, it's a similar picture. I just want to show this graph to show the total assets of each company so that you can see over time how they've changed. And you can literally see here, AbbVie was 19.52 billion back then. If we go to 2013, which is a fairer place, that's pretty much when AbbVie really launched properly, so to speak. AbbVie had 27 billion, Pfizer 187 billion in total assets. If we fast forward, so remember that, 187 billion for Pfizer versus 27 billion for AbbVie. Fast forward to Q2 of 2020, Pfizer's fallen to 177 billion, whilst AbbVie's increased to 149 billion, and on its current trajectory will overtake it. So that's the total assets there, which is one of the things I just want to show that numeric graphically there, because I know I talk about it numerically and I show you the numbers on the balance sheet, but I think on a graph you can really see how one's stable whilst the other one is increasing its assets there. So let's go to the comparison. So on the balance sheet, I'm actually going to give it a draw. Whilst AbbVie wins for its total assets and its improved stockholder equity growth, Pfizer wins because it does have much more stable cash balances. So its cash is being managed very stably. It's not got the ups and downs that AbbVie seems to have. Now, there might be a good reason why AbbVie has those ups and downs, so I'm not penalising it for that, because it does seem to be, from what we looked at just there, an annual thing, and I don't know why that is. That's something I'd have to do some more research in to find out. But Pfizer, at least, it seems pretty stable all of the time in terms of how much cash it's keeping on the books. And as we saw by its assets versus liabilities ratio, we know it's a very solid company from a balance sheet point of view. So I'm actually giving that a draw, even though AbbVie has had that massive growth in assets and stock equity for that matter. So now let's take a look at the forecasts and see what the analysts are forecasting these stock prices to do. So this is the 12-month analyst forecast for AbbVie. As you can see, the current share price is $85.10, and 7 analysts have this as a buy, 1 has it as a hold, and none have it as a sell. There's a 30.59% upside on their average price, which is $111.13 per share within a 12-month period. So that is AbbVie's 12-month forecast according to the analysts. And Pfizer's 12-month forecast, according to the analyst, looks like this. You've got a current share price of $35.48. They're forecasting the average to be $41.41, which is 16.71% upside. You've got 3 analysts have it as a buy, 5 analysts have it as a hold. So you've got 8 analysts analysing this one as well, none as a sell. You can see there you've got an estimated high of 43, a mid-range of 41.41, and a low target there of $38, all of which would of course be an increase on the current share price of $35.48. So if we go to the comparison there, you can see the analyst forecast, AbbVie has to win that because AbbVie has a forecast of 30.59% upside versus Pfizer's 16.71% upside. So that brings our total score to AbbVie 11 and Pfizer 6. So that's the total score, but now I'm going to show you a little bit of my behind the scenes extra working that aren't included in my normal comparisons that you can see here. So I'll show you that now, including how much you'd have to buy them for to be able to get certain dividend yields as well. So here we are. You can see the left-hand column there for AbbVie and the right-hand column there for Pfizer. You can see the current share price at the top. You can see my 1-year forecast, 2-year forecast, 3, 4 and 5-year forecast share price. Now, do remember folks, these are just my best guesses. I've tried to be conservative, and I think certainly in the case of AbbVie, if it keeps growing assets the way it is, I do think it's underpriced in terms of its price to earnings ratio and in terms of its assets. It's actually not that much above its book value, which is another metric we could look at, and you probably should if you're doing your own research. So it's very good value at the moment. I think AbbVie is looking like, to me, it's on sale right now. So I think I've been conservative with these. I've tried to be conservative with both of them, to be fair, but I would say more so on AbbVie. But you can see, had we purchased approximately $1,000 worth of shares in each one, in 1 year you're going to have a 5.76% return on AbbVie versus a 12.74% return on Pfizer. In 2 years you're looking at a 17.5% return on AbbVie versus a 21.2% return on Pfizer. In 3 years you're looking at 29.26% return on AbbVie versus a 26.83% return on Pfizer. In 4 years you're looking at a 41% return for AbbVie versus a 32% return with Pfizer, and in 5 years you're looking at a 52% return on AbbVie versus a 40% return on Pfizer. But bear in mind, I've literally, as you can see, done an almost linear growth rate there. Life doesn't happen like that. So when I'm looking at this, what I'm really looking at is what is the 5-year term like, because that's really where I'm looking at. So for me, again, if this was on the score chart, AbbVie is going to be my winner. In terms of capital gain potential, in my opinion, at the share price as it stands now. Now then, to get the dividend yield, to get a 5% dividend yield, AbbVie is already under the price you'd need to pay, because you would pay $104. So anything up to $104 per share on AbbVie gets you a 5% dividend yield with the current dividend yield. Whereas Pfizer, its share price would have to be $30.4 for you to get a 5% dividend yield. At the moment, Pfizer is $35.48. So really, for me to buy Pfizer, I would be looking for it to be that 5% yield, seeing as I think they are such similar companies. So I would ideally be looking for its share price to be $30.40 or less, so I can get a 5% yield. That's when I'd start to consider buying Pfizer at the moment, at this current point in time. Especially as I can buy AbbVie so cheap, and they are such similar companies, and I'm already getting over 6% return on AbbVie. As you can see, anything up to $86.67 will get you a 6% return. For it to grow to a 7% return, it needs to drop its share price down to $74.29 or increase the dividend. And bear in mind, it's just had a 10% dividend increase, so it's a really good growth we're seeing there in AbbVie's dividends. Pfizer's price to get a comparable like for like to get 7% would have to drop as low as 21.71 cents per share, which I think is exceedingly unlikely. So there's my forecast. There's what I think the share prices there's what the share prices would have to go to in order to pay out the dividend yields shown there. I've shown you my forecast on what I think the share prices will go to. Let me know in the comments down below what you think of either of these two companies. Personally, I think they're both great companies. I'll say that straight off the bat here. Both of these are good companies. I would be perfectly happy to invest in either of these companies, but given the fact I've got only a certain amount of funds to invest, I'm actually going to be investing in AbbVie at the moment at its current price levels. Obviously that could change if Pfizer suddenly become better value. Pfizer is a perfectly good company as far as I can see. Certainly its balance sheet's good, it's solid, it's got a good product line coming through, and it is developing products that will be around for many, many years to come. So I'm not knocking Pfizer in any way, shape or form. Anyway, let me know in the comments if you have a preference of either one. If you invest in either of these two companies, again, let me know in the comments down below. Likewise, if you'd like me to make a comparison video of two dividend investment stocks, please do let me know in the comments down below. Other than that, thank you so much for watching, and bye-bye.